Hello, 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 hello. It is time for my live. So, if this is your first time watching me, I do want to share with you that my name is Terry Alford. I am the Women's Wealth Strategist, and I specialize in helping business women build wealth and financial freedom so that we can live, lead, and lead live, lead, and leave multi-million dollar legacies. Now, if you are watching this as a replay, please put hashtag replay in the comment section so that I know that you can hear me and I know that you watched me and I can ask you what were your thoughts about the video on tonight. Now, I will say if you are watching this live, you are watching this live because you're either a part of my group, you're watching a part of my as part of my group, Business Women Building Wealth. And if you're not a part of my group, I'm going to encourage you to join the group. You can go to jointerry.com every Wednesday. We have Wealth Building Wednesday, and I do a training to help you on your wealth building journey. Now, if you are watching this and you're not watching it in the group, you are just being blessed on tonight because it is day, I think we're at 16 of my 21 day live challenge. And so we are rocking and rolling with the live. See, I dropped my phone, so y'all are about to see this is live for real. This is not recorded. One moment, I need to get my phone. One moment. Whew. Some people are like, Terry, I love how authentic you are. Yes, I am authentic. I am real. Again, this is not recorded. This is live. You are here with me live. So if you have any questions, this is a great time for you to ask questions, for you to engage with me and get your questions answered in real time. And if you're like, well, Terry, no, I want to talk to you privately, I have a link going across the bottom of the screen. I have a link in the the caption of this video that you can go to and press so that you can get your questions answered in a one-on-one setting. Okay, you can come into my Zoom room and we can talk about the things that you want to talk about so I can help you build wealth and financial freedom and get your questions answered. All right. So we've been rocking and rolling for a couple of minutes now. I'm going to go ahead and jump into tonight's topic, which is building, or actually, back up. Becoming, becoming like Michelle Obama, becoming your own bank like the ultra wealthy. Becoming your own bank like the ultra wealthy. Now, there are many ways to become your own bank. I mean, many ways. And there are many things that the ultra wealthy do in order to make sure that they are planning for their legacy in the most wise way. I thought I had my phone on vibrate, but seems like I'm still getting messages, but that's okay. That's all right. So I am going to share with you one of the ways that the ultra wealthy become their own bank using indexed accounts and using life insurance. Okay. So again, if you have questions, please let me know. I want to share a concept with you. I was at an event a few weeks ago and I noticed this guy was sharing the concept on stage. And as he was sharing the concept, many people were like, oh my gosh, this is so amazing. I've never heard of this before. And I'm like, what? I've been talking about this for a long time. That's all right. I'm going to keep on talking about it because there are so many people that need to know about it. So let's go ahead and dive into this concept. So if you have ever heard of the phrase become your own bank or infinite banking, what many people are referring to is using life insurance to become your own bank, and to, instead of borrowing money from the bank, you're borrowing money from your own policy that you establish with the life insurance carrier. Now, if you decide to put your money into a policy, if you decide, let me back up. There are two. Let's just go to the beginning, because there are some misconceptions I want to clear up on this live on tonight. Okay, I got a feeling I'm going to be able to help some people get a good understanding on tonight. So I'm going all the way back to the beginning. Okay, so there are essentially two types of life insurance. Okay, you have permanent and you have temporary. If you have a temporary policy, it is a term policy. You have a permanent policy, it can be broken down into several different types of permanent policies. You can have a traditional whole life policy. You can have a modern whole life policy. You can have an index universal life policy. You can have a guaranteed universal life policy. Like, you can have all these different types of whole life policies. What I am speaking about tonight is the infinite banking concept. And I'm just going to speak about the concept that you can use if you are using a policy to become your own bank. So I'm not going to say only use one type of policy or this is the absolute best way. I'm going to speak about the concepts and speak about some of the ways that the ultra wealthy use these concepts on their wealth building journey. And I want you to operate and move as a wise woman and or man. If you're a man, you're a wise man, because we know that in Proverbs 21 and 20 the Bible says that the wise have wealth and luxury. So as we're building our multi-million-dollar legacy, we want to move with wisdom. And so I want to make sure you are well informed on these concepts and understand how the wealthy, the ultra wealthy, use life insurance and indexed accounts to help them become their own bank. So in the most simplistic terms, I want you to think about the bank as a place where you're putting your money into, and that bank is putting their money into accounts. They're investing that money and they're making money on the money, and then they give you a return on that money. Okay? Let me say it again. So with the banks take the money that you put into the account, they invest that money, they loan out that money, and then they pay you a return. Most times in most traditional banks, they're going to pay you a rate of like 0.01%, depending on the bank. And they may loan that money out at a higher rate, but they actually buy life insurance. That's why we call it infinite banking. That's why we call it becoming your own bank, because what do many banks do? They take the money that you put into the bank and they buy life insurance with that money. So what you can do to become your own bank is buy life insurance. And when it's time for you to take a withdrawal or to borrow money against your own self, you're pulling it out of the insurance policy. So if you decide to put your money into an index policy, essentially what you're doing is saying, okay, insurance company, I want you to invest this money however you choose, or according to the credited indexes that I selected, and I want you to give me a return on my money. I'm not going to put my money directly in the market. My money is going to be indexed to the market, and I'm going to get a return based on the return that you receive. You're going to give me a piece of what you receive. That's what you're doing when you are putting your money into a indexed account that is a life insurance policy. What's really cool about this is that your money is protected because you don't have to take the risk of losing that money due to stock market losses. And also, heaven forbid, if something happens to you, your family is able to get a death benefit. And that death benefit, in most cases, is going to be much more than what you put into that policy. Now, I know some people are listening to this and you're like, oh, I heard whole life insurance is bad. Bad. You're not supposed to have whole life insurance. You're supposed to have term and invest the difference. Okay, well, here's the thing. If you do decide to become your own bank and use a life insurance policy, you want to make sure that you are speaking with a licensed professional who understand your needs. I do not believe in a one size fit all solution. Okay? For some people, term policies are the type of policies that you should get. But for other people, you do not want to get a term at this time. I have a client who is 70. Her husband is in his 80s. And when I wrote his policy, he had to get another policy because he kept outliving his term. And so he had to get $100,000 policy at 80 years old. And it was so much more for him to pay for that at the age of 80. And he's still living, praise God, he's still living. But the cost of insurance is so high on him because he got a brand new policy at 80. So if you do get a term policy, understand that it's only for a specific period of time. If you get a whole life policy, it is a permanent policy. And depending on the design of that policy, it is set in place for it to last you your entire life. Notice I keep talking about the design of the policy. If you decide to get a permanent policy, if you decide to become your own bank, you want to work with a licensed professional who's going to have your best interests at heart. What happens with some people who do not like life insurance or who do not like whole life policies, or they hear that whole life policies are bad, is because they were misinformed, or they heard somebody say something that somebody else said, and they really didn't get a clear understanding. So if you have heard things like, well, I don't want to get a whole life policy because I heard the insurance company keeps all your cash value. Let me explain the difference. You are able to have your policies be structured a number of ways. I mean, there are like 1,000 different ways you can structure a life insurance policy. There are some policies that you can structure to where you start off with a smaller death benefit, and the older you get, the more life insurance coverage you have, because you start off with a smaller death benefit, and then the company takes your cash value and your smaller death benefit and they add that together and they give you your new death benefit. Okay, so your new death benefit is what your beneficiaries will receive if you pass away. So in that way, you kind of will get your cash value and your death benefit, your original death benefit. But if you're looking to get your death benefit and the cash value, and it's not structured that way to give that to your beneficiaries will only get the death benefit. But what if you put in, let's say, I don't know, $1,000 into your policy, and you had $1 million policy, and you passed away and your family got $1 million? Even if they didn't get the cash value at that time, I mean, that's a great return. That's an incredible return. Unfortunately, I lost a client. She was 30 years old. I lost her during the pandemic, and her baby and husband were able to have a death benefit of over $1 million from her life insurance policies. She had more than one, and she was in great health when she got the policies. We didn't know she was going to pass away. She got COVID and she passed away, and they were able to get quite a bit of money as the death benefit. So do not let people tell you what is best for you without you being informed of how it really works and you deciding what is best for you. Get a good understanding. On all things, get a good understanding. Because for me, I believe that a $1 million death benefit on $1,000 that was paid into the policy, or even $2,000, like that's a great return on investment. The next generation can really do something amazing with $1 million. So anyway, let me get back on track. Back on track, back on track. So infinite banking concepts. I kind of was talking about ways or reasons why people may not like it. So I'm gonna tell you some of the reasons that people may not like it, and I'm gonna tell you some of the reasons that a lot of people do like it, and the ultra wealthy use it when they are planning for their family, their future family, the current family they have, the business succession. I'll share some examples of that. But some people will say, well, it doesn't make sense. Like, why would I borrow money against myself? Why would I borrow my own money? Well, the cool thing is, yes, you're borrowing your own money, but as you borrow your money, you're also getting a return on the money that you borrowed. So even though you borrowed it and you're using that money to do whatever it is that you want to do with it, you're still getting a return on that money. Now, if you are listening to people who are saying, get the infinite banking plan and then go take out money and then go buy a house and then do all this other stuff, let me tell you, these plans are best when you give yourself time. You need money, time, or both in order for this thing to really, really work like you want it to work. In most cases, you do need both. I'm not going to tell you to get an infinite banking plan today and then tomorrow your account value is going to be 3 times as much. No, you didn't give it any time. You have to give it time. Okay, you have to give it time. That's why I encourage people to get these plans as soon as possible, as early as possible. I have a client I'm working with right now who is 60 years old. She's getting a plan for herself, but she's also getting a plan for her children who are in their 20s. The children in their 20s, the amount of money that they're going to have when they're 60 is so much more than what she's going to have 2 years from now, 10 years from now, because they have more time. Okay. So when you're thinking about planning for your future, building your legacy, having your multiple 6-figure retirement streams of income, I want you to think about this. You're going to know what your risk tolerance is, because you're going to speak with a financial professional, you're going to speak with a licensed professional, and you're going to decide which products work for you based on the information that is shared. Okay. If you have somebody saying only one way is the way, then you may want to go get a few other opinions, because I believe that there's not a one size fit all. And when I meet with my clients, I share with them, well, here's option A. This is how option A works. This is how option B works. This is how option C works. Which one of these do you like? Which one of these do you like? Based on what you share, I think these are great recommendations for you. You want to be in control of your finances and you want to be well informed. Okay. So, another thing that people may say in terms of infinite banking or using life insurance to build wealth or become your own bank is they may say, well, you don't really need life insurance your whole life. Why not? Why not? Because the ultra wealthy actually do use life insurance quite a bit. They use life insurance their whole life. They use it for a number of reasons. I'm going to give you one reason. Now, estate tax issues. So let's say you have a really great estate, but your beneficiaries have to pay taxes on your estate. Well, if they do not have the money to pay the taxes on your estate, they may sell assets just to pay the estate taxes. Why do that when a life insurance death benefit can pay those estate taxes for you? So life insurance can be a very valuable tool for addressing estate tax issues, especially with individuals who have substantial estates. Remember, we're talking about ways that the ultra wealthy use life insurance to become their own bank, or how they become their own bank. Yes, they get the infinite banking policies. I'll be more than happy to show you how one can work for you. based on your needs, your budget, your goals. I can do that for you. I can do an illustration. I can do a financial needs analysis, but I want you to understand that different people use it for different reasons. And so if you have someone who has a substantial estate, the policies can help them with their estate tax issues. So if your estate exceeds the federal or state exemption limits for estate taxes, the life insurance can provide another source to cover, a source of funds to cover those taxes. The death benefit is often tax-free, and it can be used to pay off those estate taxes. And that will help your heirs be able to receive more of your estate. Example, in your estate, you may have real estate, you may have a family business, and estate taxes can be really costly. Again, you don't want your family to have to sell assets just to be able to get access to your estate. So, if you're like, well, I don't know, the life insurance may become part of the life insurance proceeds, or the death benefit may become a part of my taxable estate. Well, one way you can avoid that is to have your policy owned by an irrevocable life insurance trust, or ILIT. I lit it up. I lit irrevocable life insurance trust. Okay, this removes the policy from your estate and can potentially reduce estate taxes. Now, what I am not is a tax strategist. What I am not is an estate planning attorney. Okay, I am not that. So if you do have questions about taxes and your estate, then that's when I can refer you to a tax strategist. That's why I can refer you to an estate planning attorney. I'm just here to share with you how the life insurance can help you become your own bank and how you can use it like the ultra wealthy. Now, some people use life insurance if you have a special needs family member or a special needs child. You can use life insurance for that too, to make sure that you create a trust. You can establish a special needs trust, select your trustee, and fund the trust with the life insurance policy, with the whole life insurance policy. And that is a great way to fund the trust. So if you do pass away, then the payout can be directed to the special needs for whoever is left with special needs. So again, when you have people that say, well, I don't know about the infinite banking plan. Well, I don't know about whole life insurance. Like, why would I need life insurance for my whole life? Well, the ultra wealthy use it all the time, because not only are you able to make money on the money that you borrowed, not only are you able to get a great return on the money in the account, the money can be tax-free. The life insurance can provide supplemental retirement money. With the accelerated living benefits, it can also give you the opportunity to accelerate money from the death benefit to use if you have a critical, chronic, or terminal illness. That income is also something that you don't have to report as income, because you're taking it out as a loan. We don't pay taxes on loans. So that's how the ultra wealthy use it to become their own bank, because they're able to put the money into the life insurance policy. They borrow money from the policy in the form of a loan. I'm just giving you concepts on tonight. So if you're interested in learning more about these concepts, if you're curious about how these concepts could work for you, or if you're just like, Terry, can you show me something? I got something for you. I got PowerPoints, I got illustrations. I'm a broker. I work with several different carriers. And if you're even more interested in learning how it could work for you in your business, and you happen to be a life insurance agent, like reach out to me. Reach out to me. I will show you how to have great options for your clients. I wanted to make this live very simple. I wanted to keep it based around concepts so that you can understand that this is something you should look into. It is something you should look into because the ultra wealthy have been using it for years. For years. Okay? For years. So take a look, take a look, take a look, take a look, take a look. And if you're interested in seeing if this is a great fit for you, I want you to text bank to 682 305 1593 and I will reach out to you and we'll see if it's a great fit for you. Now, it may not be a great fit for you if you are not able to qualify. Not everybody can qualify for these types of accounts. If you are not able to qualify for it, or it's not a great fit for you, we can look at other options. If those are options that I don't offer within TNA Financial Group, then guess what? I will be more than happy to refer you to somebody that I trust that can help you as you are building your multi-million-dollar legacy. I thank you for watching my live on this evening. Again, if you have questions, please let me know. If this was good, put good in the comment section. If this was educational, put educational in the comment section. This was inspirational, put inspirational in the comment section. This was motivational, put motivational in the comment section. And if nothing else, if you want to just say hi so I know that you saw this, go ahead and give me a hi, hello, good evening, good morning, good afternoon, good day, good night. Have a great night, everybody. Thank you for watching and have a blessed evening. Adios.